So this show is dedicated to founders that are on a mission that want to build a business that can run and grow even when they step away. So they're not the complete bottleneck over their business. I think that our investments, if we play them right, can almost be another business that I think most founders don't think of it like that. That's my thesis, at least. I think if you make the right investments, I'm not just talking about like a 401k or a SEP IRA or whatever it is. I think that you can almost think about your investments as a separate business, except it doesn't have employees. There's no operations to it, really. There's no problems that you have to deal with on a day-to-day basis. There's not even any clients. And I think it can continue to grow and almost act as a business. And I've heard people say that Bitcoin's a business, or this is a business, or private equity, or there's a bunch of different ways you can do it. But I want to test this thesis with our guest today, Jeremy Boynton, founder of Laureate Wealth Management. As we go through this conversation, we're going to talk about a wide variety of different things regarding building your wealth as a founder, as an entrepreneur. So Jeremy, welcome to the show. How you feeling?
Feeling good. It's good to be here. Thank you for having me.
Pleasure to have you here, man. And if you guys stick around to the end, Jeremy is going to reveal, because he works with a lot of families and investors, high net individuals. I'm talking $10 to $50 million plus of net worth. He's going to show you guys and expose what these high net worth individuals are doing with their money, because I think you'd agree, Jeremy, they're playing a different game than the average folks. And
some of them are.
Some of them are. And sometimes you just need access to the information, need to understand where they're coming from to start playing the game that they're playing. So let's start with this, because there's a lot going on in the world of, I'd call it finance, wealth building, whatever you want to say. You've got stocks are exploding right now.
Yeah.
S&P's at an all-time high. I think that the Dow is too. You've got AI and tech stocks going absolutely bananas. Gold went crazy. Silver did too for a while, and then it kind of cooled off. Crypto went sideways, now a little bit up, now kind of sideways. What's your outlook right now on just the market in general? What do you think is going on? How do you process it in terms of building wealth?
Well, I have an opinion on that, but I want to say, first of all, I try to make investments where I don't have to be right on my view of the world. I'm trying to find ways of putting money to work where if I guess wrong, whether the S&P is going to hit a new high or pull back 20%, that we still have a chance to compound capital.
Now, I don't want to get into the alternative investments yet. Is that going down that avenue if I ask more questions about that?
Absolutely.
But are we going to get into the alternative investments? Is that what you're getting at?
Yeah, but I can tell you, I do. I'll answer the question directly.
Yeah, I'm curious your thoughts. Yeah.
I just think that we're, most likely in a middle innings of another crazy bull market blow off top.
Middle innings.
Yeah, you got AI is here. Everybody knows about it, but it's going higher. The amount of capital that is being poured into that sector of the economy, with actual real results, with real tangible revenue streams being generated, makes me think that that's going to keep going, and it will get more crazy before it doesn't.
So the thing with AI, because you might be listening, being like, how can it's got to be a bubble, it's got to pop, it's got to stop at some point because it's just running parabolic right now. But I think, and we may have talked about this on our initial call, one of the things that I heard that I think was really interesting is they said, AI stocks are going to continue, these tech companies are going to continue to go up because one, they do have profit attached. There are some good things happening. But even if it doesn't go as well as planned from a profit standpoint, AI is being propped up right now because it's sort of this global Cold War that we're in with China, Russia, whoever you want to say.
Absolutely. National security threat.
National security. So it's like they're going to prop up these companies. They're going to turn the money printers on, whatever they got to do, because if the AI doesn't continue to run, we're going to get left behind. And I would argue the same thing's happening in the financial crypto space. But is that your thought process as well?
100%. Yeah. I do think the one thing that's unique about today, you can't ever say this time is different, but it feels different.
Yeah.
Is that crypto in itself is a once in a generation technological revolution. And AI in and of itself is the same. And I don't know of another time in history where you had two revolutionary technologies take over the world at the same time.
That's a great point. I 100% agree with that, but I didn't necessarily even think about it like that. You're kind of got two emerging, massively disruptive technologies, not little, almost like the internet, the equivalent of the internet, right?
Two of those though.
Two of them, exactly. Two of them at the same time. And they kind of play together. We can get into some of that later. So you're thinking that S&P is going to keep climbing. None of this is financial advice, by the way, guys. We're just two guys talking for entertainment purposes.
Yeah.
You think it's going to continue to rip, and we're maybe midway through. So, I mean, is there ever going to be a correction?
I mean, for sure. Though, we haven't had a real, actual, bona fide sort of what I would call major correction since the Great Recession, right?
2008.
2008.
Yeah.
I mean, that's a long time.
Truly. COVID was like a little micro.
Yeah, that's why I hesitated. I don't really feel like it was fairly deep, but it was really, really short lived.
Yeah, it was. It was almost like a bump in the road, given through
Mhm.
what we went through, and
Yeah.
it came back so fast. I feel like.
Yeah, I mean, you look at the IPO slate coming up this year, and SpaceX.
What do you think about SpaceX? They got $1 trillion whatever offering.
But that's not the only one. There's many mega companies this year that are going to go IPO, and so those tend to be epochs of time in the market where things go well.
Would you invest in SpaceX right now as it is today, or would you let it ride and see how it does?
I mean, my own. Again, this is not financial advice, but I would not buy the IPO.
Same.
I think I would buy it 6 months later.
Same. I sort of, they always correct big time. It's like initial offering and then boom, it just drops.
I'm not saying that it won't ultimately be a very successful investment. I'm just saying it feels like you probably get a better buy price later. But that's my guess. And again, I want to make investments without having to guessing that correctly, because I do this for a living. But even I, spending all my time doing it, I can't guess any better than anybody else can.
Right.
That's really that's a Vegas mentality, and I don't like to make money, and I don't gamble. So
I hope this is getting you guys interested for what we're going to talk about in a little bit, because it is for me, because I want to know, hey, how can you build wealth without guessing to some extent? What was your thought process around the gold and silver doing what it did, a few months back? Because for those of you guys that don't know, gold, I mean, almost traded like tech stock or crypto. It was like it went parabolic, and then it was up and down. It was like, I don't think we've ever really, gold was kind of the safety kind of standard, not going to do too crazy stuff.
Yeah. I really honestly, I don't pay attention to it. Precious metals in general, I've never really felt I had an understanding of how to trade them. They can switch narratives so quickly.
Yeah.
It can go from being fear-based to being,
Safety.
Currency manipulation, or, there's many different ways that you can trade gold, and the market's fickle as to what is actually driving price action at any given day. So
for the founders listening, and really anybody listening, what do you think they need to know about the US dollar that they don't know in terms of wealth generation, wealth preservation? What do people misunderstand about the US dollar?
I don't know. I would say that it's still the biggest economy on the planet. We're still the reserve currency for the world. There's a lot of haters out there talking about all kinds of dystopian end games. I'm not so much in that camp.
But do you think that, would you agree that the U.S. government's going to continue to print more money and sort of devalue the dollar over time, or do you think that's not going to happen?
It seems like it's a plausible path that makes sense. I don't know that that's actually necessarily bad. I mean, anything in excess is bad, but given the alternatives, it doesn't really concern me that much.
Okay. Because isn't that a reason people put their money into gold oftentimes, or Bitcoin, for example, is that they feel like they're kind of hedging against inflation, right?
Sure.
It's like, we're going to we got the Iran war, we got all these things going on. It's like all the debt is insane. It's almost, I think, $40 trillion now.
But everybody, sorry to interrupt, but everybody in the world does that, because those trades are ubiquitously known across all financial houses everywhere.
Right.
Which means they don't work.
Right. And to be clear, I'm not talking about just the US dollar, just fiat currency in general. Right. It's kind of like the hedged against that, because we see it happen in other countries where it goes really sideways, and their dollar or whatever their currency is worth almost nothing.
Yeah. I just don't know that crowded trades ever work, and those are crowded trades.
What do you mean by that?
Well, I mean, crowded trades take on a market dynamic of their own. They start to generate their own beta, because they're so big that they move markets when they unravel. Like there was way back in the day in the 2008 financial crisis, there were trends that were happening that were saying the sky is falling, the world's going to shit, everything's going to go away.
Yeah.
And you had a whole sector of alternative investments called market neutral funds, where you basically have 50% long, 50% short. And there were a lot of crowded trades on the 50% long, 50% short. And what happened is that market neutral beta had done better than, something that was long only with risk exposure, right? And the only way people could develop cash was to sell their winners. And so they had to sell the market neutral. And then when you sell the market neutral, you're actually shorting the longs and going long the shorts. You're actually inverting the price action that the world is expecting to happen.
Hmm.
And so,
It's a little technical, but I think I'm following you.
it creates second order problems that most people can't think about ahead of time. And that's why crowded trades usually don't work out the way people want them to. And that's my personal opinion. But
okay. So you mentioned, the internet is kind of like, crypto AI is kind of like two internets at the same time.
Yeah.
What are the parallels that you see between the internet, happening in that kind of, prosperity time and how it kind of transformed everything to what's happening now with AI or even crypto?
Yeah, the easier parallel for me is crypto. I think the AI sort of storyline is newer, so I don't think it's. I'm not saying that it's not going to parallel that exactly, but clearly with crypto, you had the mid '90s through the .com bubble being this creating something out of nothing. Nobody had any conceivable understanding of what the internet was.
Yeah,
and
so
it kind of came to it rose to the level of consciousness, and then it popped. And people got pissed off. You had, Yahoo millionaires that weren't anymore. And it had to go through a loathing period. And I feel like that's exactly what's happening in crypto. There's this original arrival on the scene of a new transformational technology, and it created wealth. There was a fantastic wealth creation that happened as that happened, but it of course popped, and it's popped several times, but it went through the same kind of gyrations to the point where the market's loathing it right now. It's not the thing you talk about at cocktail parties. It's way more fun to talk about AI stories.
right. You think that's going to change though soon?
I don't know. I think it will change gradually because now the technology is real. People are not saying it's not real anymore. They know it's real. What's going to happen next is the next parallel as you compare it to the internet, which is for the next 20 years, stories like Amazon became one of the most powerful companies on the face of the planet.
Yeah.
And there's that technology that's been enabled in crypto is now the foundation's laid. It's what's going to be built on the top of those rails over the next 20 years that will really create wealth. So much, much larger, by orders of magnitude larger than what was created in sort of the first phase of arrival.
So someone's listening right now from a crypto standpoint, and I don't want to make this about giving financial advice, but is there anything that you may, let's just use a hypothetical situation with you, that you might put money into that you think is going to have tremendous upside over the next 3, 5, 10 years? Like, how do you get involved in it? Like, what do you even go into?
Well, I mean, I guess shameless plug. We run a fund, a couple of funds that
Right.
do that. But the bottom line is you're looking for technologies that are solving real world problems where you're pulling out a middleman from some transaction and can do it at scale and actually have a product that's working and are changing the world.
That's what I think people don't understand about crypto, is they don't see it as solving real problems or technology.
Right.
They see it as like the meme coin.
Yeah.
Or like, oh, it's like, it's Bitcoin's like just some imaginary magical coin that there's no physicalness to it. It doesn't really have any value. Can you trade it? What can you buy with it? And they just kind of see this mysterious thing versus technology, products being built on it, the way of the future,
Yeah, not as a again, not as financial advice, but the poster child for the aha moment for that is a token called Helium. And Helium is a project that started back in, I think, 2019, where the founder said, we're going to disintermediate telecom. We're basically going to replace AT&T, Verizon, all the big carriers. And we're going to do that because I'm going to sell a little hotspot for like, I don't know, $250. And you're going to plug it into your wall and attach it to your Wi-Fi. And it's going to project a signal that goes maybe 200 yards. But if I get enough people to do that, I can stand up my own network and I can carry traffic over that network. And so instead of
Mm.
building cell towers on leased property in downtown Manhattan, where it's extremely expensive, and trying to project a signal that can go 5 miles, I can put 1,000 of those little hotspots and create the same signal with actually arguably better coverage. And they did it, and they stood up a global network. And now AT&T and Verizon and all those major carriers are offloading traffic onto their network, especially in crowded urban environments where it's much more expensive for them to put up their own infrastructure. And so
Mm.
that's one small example of the many kinds of ways that crypto is going to sort of trickle into the everyday world. Another one would be um, Hive Mapper. Hive Mapper is to Google Maps what helium is to telecom.
Mm.
So Google Maps is, it's expensive software, it's expensive cars. You got to, road mapping all around the U.S. Why don't we just put a dash cam in an Uber or in a long haul trucker? Incentivize them to participate in the network and pay them for their miles, which they're already going to drive, and we can refresh roads faster. We can get better data,
Wow, that's
and
brilliant.
yeah, so it's things like that where there's just going to be hundreds and hundreds of total addressable market kinds of ideas that get birthed and created now that the basic rails of crypto are established.
How is that one on crypto? I don't see the connection
Well,
to
because
crypto.
because the entire ecosystem thrives on a token, like the
Oh.
money supply of, if you want to, same with helium. If you want to use the network, you have to spend helium tokens.
Mm.
You earn helium tokens by contributing to the network, and the
Mm.
same for like the Hive Mapper.
Okay. Well, those of you know me well. I know I could go down the crypto rabbit hole for the next 2 hours, but I want to be respectful of your time. Um, do you believe in diversification in terms of building wealth? Because you hear some people saying, diversify. It's so important. You got to do it. You hear other people saying, I made millions because I went all in on this one thing.
Yeah, I think that's a great question. It's not as easy of an answer, or it's not as straightforward of an answer. I think it's fairly simple. You don't become Bill Gates by diversification.
Yeah,
After you
exactly.
after you become Bill Gates, then you want to diversify.
Because then you're preserving the wealth, not
Right.
creating the
So
wealth.
it really is about your goals. It's about where
Okay.
where you are and what you're trying to do
Well, that's
along
what
the
I
way.
think about sometimes. I put a lot of money back into my business, which has
Yeah.
done well. I put money into crypto. Of
Hmm.
course, I've got other investments and stuff, but I'm heavy in crypto.
Yeah.
And my thesis is that I think it's going to be the financial rails of the future. And I'm investing in not the 950th meme coin.
Right.
I'm investing in the Bitcoins, Ethereums, the Solanas, the ones that I believe have real utility and use case, and are trillions or billions of dollars in market cap. Um, but I think about that all the time too. Is like none of these people that you see that got wealthy. I mean, I shouldn't say none of them, but a lot of them that made it big, they didn't go into a million different things. They
Yeah.
went into a couple, maybe one or two, milked the hell out of it, worked their ass off, really got good at it, and then made money, and then said, "Now I'm going to preserve that wealth and put it into a few different asset classes."
To a large extent, what I do in my multifamily office business is not make people wealthy. It's they're already so wealthy that their money is a burden and they need some help managing that while they go off and focus on the thing that's going to make them the next $100 million.
That's tough life, right?
Yeah,
Yeah, that's cool. So what if we were sitting here though, let's just say I brought in 100 founders in the room,
yeah,
entrepreneurs, and maybe they got 7-figure businesses, high six, and maybe some eight. What do you think is the thing that most business owners don't know about wealth creation or building that you would, be able to speak to them and kind of blow their mind? Like what are the things
man.
they don't have access to that you think they should know?
I'm not sure that I have much to offer on the entrepreneurial side. I'm an entrepreneur myself,
Yeah,
but I consider myself, uh, you know, learning. Not. I'm not the professor. I'm the student.
right.
So I actually, with 100 guys that are, hard at it, getting up, sweating equity, trying to figure out how to make it work. It'd be more of a, let's go grab a beer and talk about how we can how we can share war stories and learn from each
Hmm.
other.
But
To
what
be
about
honest,
from a wealth generation or a wealth building standpoint? What do you think that they don't know? That because I talk to founders all the time, and I think most of them are just kind of, hey, I have a financial advisor. We put some money away, and there's
Yeah.
not. I mean, maybe that's all
I
they
don't
need to
think,
do.
yeah, I don't think my role is the most important part of that game. I think
Hmm.
I think the founders that are, and not all of my clients are entrepreneurial.
Yeah.
I'd say probably 3/4 of them are, but the ones that are, the ones that have done better are the ones that found something interesting and they just, come hell or high water, never gave up. They stuck with it, and
Hmm.
they just had a never
That's really
say
it.
they never had a moment where they checked out. And I've had clients come and go where they checked out, and they couldn't hack it.
Yeah.
And that's a life choice. But the biggest difference between the guys that make it and that don't, in my observation, has nothing to do with my ability to add value as an advisor with the crumbs around the table of what they're creating.
Hmm.
It's more about their ability to stay focused.
Yeah.
And then when they actually make the money, then my job becomes, hey, let's figure out how to be really shrewd about diversifying and add as much entrepreneurial juice to this part of the game as
Hmm.
possible. That's
Yeah.
actually very interesting magic, but it's a second order effect. It's not the primary reason to get them successful.
Yeah. Yeah. I do feel like in the world of entrepreneurship, it's very much, can you stay in the game? Can you continue to get better and grow? Because you'll have doubts, you'll have tough moments, you'll have the
Hmm.
challenges, and it's like the people that just stuck with it. Now you can't just stick with it. You got to get better. You got to evolve. You
Yeah.
got to improve. But if you're willing to fight through the shit, usually there's some pretty great stuff that happens on the other side of that.
Yeah, I was. Yeah, you're making me think though. So sticking with it, but the other part you just sort of keyed on is, uh, you know, uh, being able to hear truth, like
Yeah.
especially uncomfortable truth. Like
What do you?
we all come with biases, and we
Yeah.
all tend to create compartments in our life that give us safe feedback.
Mm,
Um, and that's probably not helpful. The
mm.
best thing is to find uncomfortable feedback and to actually be able to digest and accept the message, even if you don't like the messenger sometimes. But that's hard.
What's some of the most uncomfortable feedback that you've gotten in your career?
Oh my gosh. Um, well, let me think about that for a half second. There was a point where I was much younger. I had a business partner. Um, he basically wasn't really carrying his weight, and I carried the team. Um, and there was some dysfunction between us that
Mm,
lasted 7 or 8 years.
mm,
I should have left a long time ago. But when I finally did leave and I was able to hear truth and kind of look back, I realized, yeah, he had his part to play, but I was an asshole. I was arrogant. I outworked him. I didn't respect him. So I contributed my part.
mm. Well, that's, you got to take ownership too, right? Yeah,
Yeah.
you have to see both sides.
Yeah.
Yeah,
Both sides. I need to own that so that I don't do that again. But I
exactly.
also need to realize there are tells for the shit that he brought to the party, which in my future networking and finding other partners, I need to avoid. So,
Yeah. It is. I think it's important to your point to have people in your corner that will tell you the truth,
mhm,
because some people will just, they're so afraid to ruffle the feathers or
yeah,
to not be liked, and it's like they don't want to, like you can sit down with somebody and they're telling you about something and you're like, hey, you're the problem here,
yeah,
or this is, you need to change that or fire that guy or this or that, whatever it is, and I think a lot of people are just scared to do that.
yeah. I think most of my theory is all people live on this one axis. I mean, we all live on multiple axes, but the axis of speaking the truth or love. Like most of us lean towards being truth tellers or lovers.
Mm,
And the fact is, it doesn't matter which one you start from. You have to understand where you're starting from, and then you have to work really hard to figure out how to embrace the opposite. Because doing either one without the other is fairly impotent. But being
right.
able to do both at the same time is very powerful.
Yeah, because that is love, being able to also have the truth in there, right?
Yeah.
Too, yeah. But you're right. We do kind of separate the two. Either I'm going to come from this person with a loving angle, or I'm going to come from them with maybe the harsh
Hmm.
truth. And the reality is, if you love them, you'd
Yeah.
give them the truth and what they need, not
Totally.
just what they want to hear.
Yeah.
Was there a light bulb moment though for you in terms of, from a financial or wealth building standpoint? Was, because I feel like there's been a couple for me when I understood like more about how the dollar works, when I understood crypto, when I understood a little bit of the game of entrepreneurship, even though I feel like I'm a student, I'm still learning every day. There's kind of these like almost now you're in the room and you kind of see how people are doing it, and you're like, oh, that's how people are doing it, building businesses, generating wealth, getting more from their money, whatever it might be. I feel like there's these kind of aha moments or light bulb moments that I had. Were there some for you over the past few decades?
Um, Probably so. It feels more gradual for me. Maybe. Um, I've I do remember we used to work at a big firm. We pulled out and started our own firm, and we were so scared that we didn't have the mothership behind us. We weren't sure if our clients was. We really didn't know if our clients were trusting us or the firm.
Mm,
And it turns out, most of them came with us. And we're like, wow, you know, my relationship was actually more important in that than it seemed. And there have been multiple iterations of things like that where not huge aha life changing moments, but just you make a decision like that and it gives you a little bit more confidence to try another edgy decision,
mm.
and you just keep pushing out in the layers of kind of the ripples in the pond and the effects that it has on where
What
you
made
go.
you guys want to go out and do your own thing? Because you probably had a nice cushion job, making good money, some
Um,
benefits.
Yeah, I don't know. I think it was just I had a bug to own it. Just
Mm,
wanted, yeah, just didn't want to work for somebody else.
yeah, I was kind of the same way. For me, it was 2019. I was like, I feel like I can do this on my own. I feel like I can start something and kind of run it, and
Hmm.
not really knowing what you're getting yourself into,
Yeah, yeah,
But just I don't know, kind of have it going back to like just that wavering. We're gonna make it work. We're gonna find a way,
right.
even if it gets challenging. We're gonna fight through it. And I think if you got that, you can go pretty far. You know,
Totally.
yeah. So, I'm curious your thought process around retirement,
Hmm.
because I just had a guy in here earlier for another episode, Rick, awesome episode. We were talking about retirement. I won't say his age, but he's at past the age where most people would retire, your
Yeah.
average person. And he's like, I'm loving it. I'm doing my thing. I'm running every day. I'm running my business. I'm enjoying life. And it seems like a lot of the entrepreneurs, if not all of them, I don't hear them talking about like retiring one day. I hear them excited about what they're building or moving on to something else, or maybe an alternative version of what they're doing now. What are your thoughts on retirement? Will you retire one day or?
I mean, it's a really fun thing to talk about. It's kind of ironic in my business. I'm supposed to be the guy that helps people retire.
Right.
Go hit a white golf ball for the rest of your life or
Right.
whatever. But in my experience, and this is true for advisors in general, they say that over time your book of business starts to look like you.
Mm,
And yeah, I don't see that. I mean, nobody of my clients are getting out the slide rule and tight fisting it to get to that 62 years old with whatever number makes them be able to stop working and do
right.
nothing. No, it's just that's an outdated concept for my world, for the people in my world. It's completely more about um, enjoying what you're doing, feeling passionate. Actually, I'm going to say it, feeling called, like missional,
Mm.
having a reason to get up beyond the growth of your bank account. Um, and so I don't ever want to retire from that. Now, will I slow down? We're going to go to summer. We're going to go to Whistler this summer, like we do as a family.
Where's that?
It's above Vancouver. It's Western Canada.
Ooh,
Yeah,
cool.
it's a great place, and I don't own a place there yet, but we want to. And would I split time? Would I slow it down a gear and spend some time, half the summer up there? For sure.
Yeah.
But to divorce myself from the idea that I'm going to get up with a mission today is doesn't sound reasonable to me. And for most of my clients, there now many some of my I can't say many, some of my clients have wives that have tolerated workaholic tendencies for 30, 40 plus years, and they're starting to stomp their foot. And it's an interesting dynamic to be in the middle of that and to be a voice, because the guy's like scared to death. He doesn't because his identity is wrapped up in what he's doing, and he thinks he's going to die of a heart attack the minute he stops working.
Mm.
It's a very interesting, fragile balance.
How do you handle that? I'm curious because, like, yeah, it's such a opposite. One person doesn't know how to not work like crazy, and the other person's like, God, finally, he can get to a point where he can
Right.
not work his ass off.
I don't. The thing is, I don't. I try not to handle anything.
Mm,
My job is to listen, and when I'm asked, give honest feedback.
That's a good way to do
But
it.
truly, I mean, it's like, I don't know if you're married, but it's like my own marriage. Like, she doesn't always want me to tell her something. She just wants me to listen
Mm,
sometimes.
yeah.
So,
Well, I feel like to go back to your point, like we're not as human beings, we were never meant to hit some age and then retire. We were kind of meant to do productive things
right.
and be part of a community. And there wasn't a set period of time. I think it was something probably institutions created to sell more products or whatever it
Frankly,
is. But
frankly, my industry, like
yeah,
my industry is, I need to turn you upside down and shake you for loose change and guilt you into putting more money into that 401k.
that's actually refreshing to hear somebody say that in your seat, because you kind of don't hear that. You being willing to talk about the things that you think are maybe a little bit broken or need some change in your industry.
Yeah.
I think that's great.
Yeah. Most people, if they're really going to be rich and accomplish their goals, it's not going to be by saving in their 401k. It's going to be by doing something awesome that they love doing while they were doing it.
Mm, so true. I think about, yeah, I couldn't even envision a world where I would just like quote retire and just not be. Now, it doesn't mean I want to save for things, but I think
Hmm.
also just like it sounds miserable to save your entire life, squeeze everything you can to get to 65, and then what now? Start living your best life and doing what
Yeah.
you want to do. I feel like I do what I want to do every day.
Yeah.
Doesn't mean it's not hard or challenging, but it's just like I enjoy this stuff. I enjoy doing the business. I enjoy
Hmm.
hanging out with my kids. Like I feel like I'm kind of doing the life that I want to live. It's not perfect, but it's awesome.
Yeah.
And to me, I hope that more people can strive for that,
Sure.
because that to me is a good life versus slaving away for 40 years and then being like, finally, I can enjoy my life. Because we also don't know how long we have on this earth.
Yeah.
So you may save until you're 65 and then live till 68.
Yeah.
And it's like, well, you just worked your entire life to live 3 years playing golf,
Yeah.
you
Wait,
know?
I've told the story a number of times, and this is way a long time ago, probably, gosh, 20 plus years ago. But I had a client who was that guy. He was an engineer. He's working for the man, typical kind of salaried guy, decent income, scrimped and scraped and saved, and got to the point where they had a few $1,000,000, and he could do it,
Hmm.
but he had done it so long, he just he couldn't let go. And so one time he comes into the office for a review, he and his wife, and I had prepared it. I think it was a $20,000 check, and I said, "Hey, I want you to go spend this on your wife. I want you to go take her to Europe." And she's all
Yeah, that's
excited,
cool.
and he's all kind of, oh, he puts the check in his pocket. He comes back 6 months later. He goes, "Oh, we saved a little extra money. I need to put $20,000 into my account." And so they never went.
Oh,
He finally retires in his mid-60s, and they did the trip to Europe. They were getting ready to go. He had a minor shoulder surgery, day of, not overnight, nothing
right.
complicated, that he had to take care of before they were going to go. He died on the operating table.
Damn.
Never got to go.
Damn. That sucks.
I tell that to my clients when they get persnickety about holding onto their money too tightly.
Yeah. Yeah, I feel like people are just kind of gripping things too tight
Yeah,
sometimes. Like, fucking live your life.
yeah,
We forget to live our lives. We're
yeah,
so worried about, and in this audience for sure, founders, entrepreneurs, we're all guilty of it. The next business state, the next growth, the this, we're hiring, we're just, man, just also just live some life too,
hmm
and hopefully you enjoy what you're doing. So that's part of it. But oh, it's kind of sad to hear about,
Sorry,
you
didn't
know?
mean to
No, it's
take us down there.
No, it's not. It's just life. It's reality.
Yeah.
This is the conversations we want to have. I think people need to hear that. I might wake somebody's ass up today. So it's good. It's good. How much money would you need to retire at 60? Let's say. What do you think? Like, what would be a guesstimate? Like, if we say,
It's a more function of how much, what's your burn rate. Like,
mm,
I think on the low end, there are wealthy people, friends and clients, who they could live on $300,000 a year.
mm-hmm,
The mortgage is paid. It's
yeah,
just, most of the people that I'm working with in the 10 to $50 million world. And by the way, I have a small corner. I have 19 families, core families. So this is not.
right,
I don't have hundreds and hundreds of these.
mm-hmm,
I don't think I could. I don't think I could relate to that many people in this capacity. But um, it's probably closer to 500 to a million a year, just with the lifestyle. If you're worth $50 million, you're used to first class. You're starting to
Right.
occasionally fly private, or and you probably have multiple houses, and just the burn rate it's north of $500,000. It's seven figures for sure.
Okay.
So with $1 million, if you want that to be a 4% draw on your corpus, it's whatever $1 million divided by 4%.
Well, that's what I want to ask you too, because like if we just push aside the retirement thing,
Mhm.
right? Let's just say, even though I think people try to figure out a certain number they have by 60, 55, whatever it is. Let's just say I'm a business owner, been in business maybe a couple decades or 10, 50, whatever years. Is there a number I can put in an account that I can eventually just take withdrawals from that? And I can live off that basically the rest of my life, because the interest or the dividends, whatever you want to call it, from that bulk amount, I can live off then now and basically in perpetuity.
Yeah. So
what would that because I'm thinking for myself, right? Like let's say, or there's business owners listening to this right now saying, could I put aside a certain amount where eventually if it got to this number or around there, I know it depends on lifestyle, I could kind of just live off the interest. Maybe it's in money markets, or would it be in bonds? I don't know, something kind of safe, I guess, right? Low risk, and you just kind of live off it. Because once you make enough money, if you're smart with it, you kind of can just preserve it and live off that. Is that correct or no?
It is somewhat correct. The 100-year market, stock market, might be 9.5%.
Right.
The bond market, depending on the bond market regime you're in,
right now
is different. It's actually getting more interesting.
Yeah.
We haven't invested in the bond market in decades.
It's high right now, right?
It is, relatively speaking. So basically, if you use traditional financial market indexes, and you put a blend of stocks and bonds, and you try to get on the conservative end, you should be able to generate, 6.5 or 7%.
Okay.
And if you take 2.5% of that for inflation, and you live on 4%, you can back into the number that you need to cash flow your life.
Yeah. I think
it's that's not no risk. That's not money market investment. That's taking on a diversified amount of different kinds of market risks. But
do you think the company 401k is a scam, or do you think it's a good investment for employers? Let's just say, because I know business owners listening, they may have one set up for their team and whatnot. Do you think that's like the hamster wheel they want you on, or do you think it's a legit investment?
It's a legit investment for people who aren't wealthy enough to have access. And I wish I didn't have to say wealthy enough, but unfortunately, access to really interesting alternative investments is firewalled only to people that have means. But if you don't have that, then it's better than nothing.
Right. Because it still compounds over time, right? And it's kind of keeping you away from the money. So you do have some type of nest egg. Because what we're not saying here is you want to be 65 and have nothing. That's not what we're saying either, right? We're just saying enjoy your damn life. But so let's go back. Speaking of the alternative investments. So most of your clients are, 10 to 50 million net worth. First of all, I'm curious before we get into that, what made you go that route? Because most of the financial advisors I've talked to, they're talking to just regular households.
Yeah.
People making anywhere from $100,000 to $500,000 a year. You went way less clients, but higher net worth.
Yeah. It was a maybe a circuitous route. I started as a rookie broker in 2000 or late 99, which was a great time. It was smack dab in the middle of the .com bubble, although I didn't know it until 6 months later. but you might think that'd be a hard time to start, because it's a pretty brutal industry. Like 1 out of 5 people actually stick, or the numbers may even be worse than that.
Is that right?
Oh yeah, it's really like
for financial advisors.
Well, I think my class was 100 guys, and by the time I left the firm 4 years later, there was less than 30 left.
Wow.
And that's I think those numbers are normal. It's very hard.
See, I would think because of the industry, you build up a book of business. Don't most people stay with you, and then you just kind of keep adding to the business?
For sure, you do.
Yeah. So
it was great for me because I didn't have any capital that I was managing that I had to apologize for. An incumbent, is getting his head handed to him, and his clients are asking for answers, and I didn't have to play defense. I could play offense. And so it was a good time for me to accumulate assets, because people were willing to listen to somebody. Right. But then the 2008 financial recession hit, and I did have capital to defend then. And so, you have 2 100-year floods back to back, And I thought, this is stupid. I started to realize I'm not adding any value anywhere. Like I can't make the S&P go up or down. I'm not, I can't affect Jamie Dimon's outlook on what his bank is doing, or like
Yeah.
I'm so far out of control. I thought, I'm either going to go do something else with my life, or I'm going to figure out how really big money works. Because I bet if you talk about $100 million people and up, I bet they're not doing what I'm doing.
Totally. Yeah.
But
Yeah.
I wanted to know, and so I got curious, and I kind of weaseled my way around and found a way to get attached to a family office in Chicago, and that was my learning ground. I came up to Chicago, spent 4 years working in their office, helping them, and just learned all things alternative. They did a ton of private equity work and real estate deals and all the things I didn't know anything about.
So it kind of goes back into your mission, kind of having a purpose
Mm-hmm.
for why you're doing what you're doing, because it sounded like you were like, I don't feel like I'm making that
Yeah.
much of an impact. It's kind of like, hey, S&P 500 index, some bonds, 60-40, whatever it
Yeah.
is. And it's kind of like, it's going to go up over time. You'll have some peaks and valleys, but it's just going to kind of
Yeah.
do its thing. And you're like, I want a little bit more of an impact or control on how I can
Sure.
help people.
Yeah, and I think now I know there's good guys that do well in those big platforms, but I think my opinion is that to do well in those platforms, you actually have to be a great people person. You don't actually have to be a great investor.
Yeah. Yeah.
And that there's a difference there. And I'm really not that great of a people person.
So you wanted to get into more of the investing technical?
I did. I
Yeah.
wanted to get to
Yeah.
somewhere where I could roll up my sleeves and actually
Hmm.
get passionate about an idea and actually lock arms with an operator and feel like I had a voice.
That makes so much sense. Okay, so let's talk about some of these alternative investments. And even beyond that, I'm curious, do the high net individuals, do they operate in a different way than your standard person, that's making 100, 200, 300 grand? Like, do they just think differently? Or is it just they have these other alternative vehicles that most people don't have access to?
I think the answer is I don't think they are any different. I think that they because there's I'm in this really small subset of the people that I've found, but there's way more people in the $10 to $50 million net worth world that are being managed by JP Morgan and by Goldman Sachs, doing the same things that they're doing essentially for people with $250,000 rollover IRAs. I mean,
Wow.
the science isn't that much different on that. And there's a ton of that. So the difference isn't really the size. It's more the entrepreneurial edge. It's somebody who's interested in that kind of framework or thinking.
I can see that. Okay, so what are some of these alternative investments? Let's break them down. What
Well,
do we got?
so the first I've been quoted as saying this a fair number of times too, so it might come up somewhere in other press clippings. But the first thing I want people to think is, my clients is if the Dow has a horrible day and is down 6% on the day, I want my clients to go home, pour themselves a glass of wine, hear that on the news, and actually credibly wonder, I wonder if my investments went up or down today. So the first lens of what we're doing is to try to find ways to compound capital over time that I'm not saying we want to be negatively correlated with markets. That's not a long-term successful strategy.
Right.
But I'm trying to remove, I want a correlation of zero. I want to find ways of compounding capital that don't actually have a pattern recognition with traditional markets. That leads you into all kinds of different places. Could be private credit, where you've got a private pool of capital and you're lending to people, but you're basically a pawn shop business model. You don't care whether they pay off or don't, because you got collateral that you can sell for more than you lent to them. It could be.
Now, is that risky though?
It is. There are different risks. The risks in that, and actually, private credit it's been a lot of press coverage lately.
Why? Because I hear about that, but I'm not in that world, so I don't know.
So we've been doing private credit for, I think, 13 years.
Private credit is what you said, lending to people, having their collateral, right? Yeah.
Mm-hmm.
So an example would be like a real estate. You're going to lend people that are flipping houses, let's say.
Sure.
And you might lend them money and they can't get a loan through the regular bank because it's not fast or they're not qualified.
But
You lend.
you're generally lending you're lending 50 to 60% of what you believe the value is, not what the not what the flipper thinks it's worth.
Right,
But if you
right.
think it's worth $1 million, if you think you can sell it fire sale auction at $1 million, then you're not going to lend more than 600,000 on it, and you're going to be in a first lien position,
Wow. So you're in a great spot regardless.
and you're in a
Yeah.
first lien position, and you're personally guaranteed
Wow.
with balance sheet. Like they have to have other assets that you can go at after and attach.
Wow.
Now, the reason it's been in the news is because there's a new, I'm going to call it a new version of private credit, where you're actually not using real estate collateral at all. You're loaning money to startup tech firms, SaaS businesses,
Mm.
which have had some traction, and you're doing a cash flow loan. So you're loaning them 2 times annual cash flow. So there's nothing to sell. The only way you collect on that loan if they default is you take over the business,
Right.
which doesn't work. I mean,
Who wants to do that?
nobody's going to do that. And
Right.
because AI is disrupting SaaS, the world's starting to freak out and say, well, there's a whole bunch of maybe skeletons in the closet there. And it's opaque. And the sponsors who are managing, these are the biggest sponsors in the game: BlackRock, Apollo, all of these, Blue Owl, all these firms are managing tens and tens of billions of dollars in these structures. And on top of that, they're leveraged funds. So like in the private credit we do, you raise $100 million, you loan $100 million. BlackRock's raising 50 billion, borrowing 50 billion, and putting 100 billion to work. It's a
Jeez.
levered product. So now, so there's way more risk over there than there is even here. So, and the devil's always in the details, and that's one of the biggest things about alternative investments is, everything. It's private for a reason. These are very nuanced things. You have to understand structure, incentives, and even in the same space of private credit, there are massive differences in risk profiles.
So as an investor in private credit versus the traditional
Mhm.
index S&P 500, whatever it is, what am I getting with the private credit that I wouldn't get in some of these other routes?
Well, for 12 or 13 years, we're averaging 10.5% net yield annually on what we are considering our replacement for fixed income, which is, 3x the yield you can get out of the bond market if you're not chasing high yield paper.
Okay.
So it's and you actually are in a better position. The bond index is made up of something that nobody controls. I mean, the paper is so diversified. We're talking about actual granular loans that are owned by a pool, and I have the right to go foreclose and sell REO.
Okay, so private credit's one.
Yeah.
What's another alternative investment that rich people do?
We love covered land plays. We love to buy dirt that's being mismanaged. It's got a bunch of C+ office buildings on it that are dilapidated, but the dirt is in a particular area where there's massive regentrification going on. Even sometimes cities are rezoning dirt to try to get developers to come in and tear down ugly stuff and put up new stuff. We may do 2 of these a year. Like, we're always fishing for this trade. But if I can earn, anywhere from 8 to 12% a year by running a couple of office buildings while we're positioning the dirt to sell to a multifamily developer with upside, those projects take us typically 3 or 4 years.
Sometimes I think about these big subdivisions, and if you own that land that got put on, I feel like they made some coin, didn't they?
Yeah. I've done this a number of times. I'd have to count. I would bet 5 or 6 times where I've been the sponsor. Like, we invest. We can be either makers or takers. Like, we can invest passively on behalf of my clients, but we also, when we find a deal, we sponsor it ourselves. So, which is also very unusual for a guy in my position. Most advisors want to shy away from being a sponsor because there's a conflict of interest, and
Right.
we run the other. We massively embrace that. We disclose it. I want my clients to know, hey, I'm a sponsor here. I've got sponsor economics. I can make a carried interest if this works out right. But that it does a couple of things. It keeps me sharp in the game. It helps me really due diligence other people's deals better because I have to do the same when I'm doing my own deal.
Mm.
So yeah, we like being on both sides of that.
So private credit, land. What
Mhm.
else? Any other big ones that we're
Yeah,
missing?
private equity, but I have a very passionate, um, s- sort of differentiated view on private equity. So most private equity is really a combination of uh, financial engineering and being a great operator. So you're actually not creating something out of nothing. You're
Mm.
taking something that already exists, and there's thousands of sponsors doing all kinds of various niches of trying to figure out great financial engineering, which there's nothing wrong with great financial engineering, and combining that with being a great operator. Almost all of them are um, timed deals. It's a buy and build where I'm going to buy an anchor, lawn mowing business, and I'm going to buy, 200 more and build this interesting enterprise and then go
Mhm.
sell it for a multiple. Or a fix and flip. You got a business that it's not really a buy and build, but it's some version of I'm on the clock. My job and my incentives as the sponsor of this deal is to figure out how to take a $0 EBITDA business and get it to, whatever, 200, 500, a massive multiple of where it was, and then sell, on a multiple exit. What's not, that creates all kinds of negative incentives between the buyer and the seller, because the buyer, uh, it's his legacy most of the time, right? He's
Mhm.
spent his life creating this business. There's thousands of baby boomers out there that are stranded right now
Yeah.
and that don't have anywhere to go, and they're loath to try to step into the shark infested waters.
Mm.
So there is a relatively newer model where it's permanent capital, where instead of buying and building or fixing and flipping, you literally go buy businesses to hold them forever. Like the capital stack understands, we will never sell. The only way you're going to live on this investment is you're going to eat the cash flows.
Mm.
And so it actually creates a more interesting incentive alignment with the seller, because he's not, in the shark infested waters, you're going to sell, and you're going to sell 51% control. You're going to still feel like it's your business because you own half of it roughly, but you don't. And they're going to strip your business of everything that's important to you.
Right.
Your best is superstars and the company picnic and blah blah blah. Whereas in this other model, look, if you can buy the business and in a way where I have to eat on the cash flows that I create, you don't have to butcher the business in 3 years to get somebody else to buy it.
Mm. So you guys actually buy the business in this case?
This is passive capital. We haven't yet launched a business to do this ourselves as sponsors. We're thinking about it, but
Got it.
we've got a relationship with somebody who is, I mean, the best in the business at doing this, where they're buying blue collar businesses.
Yeah, that's a big one right now, isn't it?
3.5 to 4 times EBITDA. Capital stack is 40% equity, 40% bank debt, 20% seller finance carry. Those numbers translate into 40% free cash flow after bank debt.
Mm.
Half that goes to the equity, half goes to the bank note. 4 to 5 years later, when I'm sorry, not the bank note, the seller finance note, and 4 to 5 years later, when the seller note is paid off, literally you're getting 40 cents on the dollar drop into the equity every year. So that's unheard of, to put 100 grand into a fund that's holding, 12 operating businesses across blue collar sectors and geographies, where if you're just patient, it takes 3 years to get all those businesses bought and in. And then you've got to wait another 5 years for all the notes to pay off. So you got to be in it for 8 years. But 8 years later, your cash flow is coming in at $40,000 on your 100 every year.
Jeez.
That's a very unique sort of lens to which we've dedicated a fair chunk of capital in our client portfolios.
Well, it does seem like there's a lot of baby boomers that are going to be retiring that are,
Yeah.
they own businesses, they have these assets, and it's like something's got to happen with them. I mean, certainly they could shut down, they could be passed down to other generations, but I think there's going to be a lot of opportunity for people to come in and really do something cool with them and maybe take them to the next level in a lot of cases.
Yeah.
Anything else that we missed there on the alternative? Would you consider crypto part of that? Or
for sure. Crypto is part of it. Yeah. Crypto is sort of the craziest pants on fire, aggressive, risky edge.
Really?
Oh, for sure.
Yeah.
So, I mean, but it's still a healthy allocation in my client's portfolio.
Yeah.
So we're not shying away from it, but I think it's changing. I think over the next 10 years, it will
For sure.
it will start moving towards more of a NASDAQ on steroids trade.
Yeah.
The venture capital, the epoch is going to start waning because it's not gone. There will absolutely be new ideas, but the base layer infrastructure is probably nearing the end. So the next level of VC work will be more building the stack on top of that. But as that matures and as more capital on boards, it will look less venture capital and more like owning Amazon stock for
Yeah.
20 years,
Right.
which I'm excited for.
Yeah. Yeah, for sure.
Yeah. And there's one other venture capital we think we kind of touched on a little bit about kind of national defense issue. I can't remember where that came up earlier in our conversation, but
Yeah.
we do have an access to a venture capital guy who is really gifted at gaining access to some of the most interesting AI and national defense tech level sort of creators. And so, but that, these are all pieces of a portfolio. Not, we're not ever throwing down more than we can lose in any one of them.
If someone has a financial advisor and they ask them about crypto or some of these alternatives and they kind of, I wouldn't get into that. It's kind of risky. I wouldn't do it. What would your advice be to them, to the business owners that are talking to their advisors and they're kind of just brushing it under the rug?
Well, that happens every day.
Of course it does.
Yeah. And, ultimately my advice is to look for an opportunity where they're, I can't say anything until somebody's ready to listen. Right.
Yeah, that's so true.
So I can easily screw up a deal by spilling my marbles in the lobby, so to speak, when somebody's not actually, really interested. So you have, in my job, I mean, look, it doesn't matter whether you're rich or not. If it's all the money in the world to you, it's important. And so being in the job and in the seat of a financial advisor, it's hard to convince people that you're credible, that you can help them. It's a very personal, relational thing. But to the point when people are starting to ask questions, they're starting to sniff around and think, yeah, I don't know whether if somebody's actually in that place, then we sit down. It's not a pithy saying. We just spend hours and hours and hours the sales cycle is very slow in what I do.
Yeah.
And you just build trust. You build trust and you work through conversations and iterate on questions and answers. And
what's been the worst investment you've ever made or the biggest mistake you've made?
Okay.
I can share mine too.
I probably have two.
Stupid one.
I have two. I've done more than two, but back, I don't know, 15 years ago, I had some really good friends who were in the oil business, and they had made just a crap ton of money over the years, and I'd watched them do it. And I was convinced that I was going to get a shot to drill some wells with them, and I did. I had an opportunity. They had this whole thing figured out.
You get some tax breaks from it, right?
The geology, and we went and raised a small SPV, raised some capital, and we were drilling gas wells in Oklahoma. And I went on site. I watched them punch hole. I was on an oil rig with a roughneck like for 5 hours. It was epic.
That's cool.
Awesome, but it was a dry hole. Now the pitch was we're gonna drill 2 wells. And if we're right and there's something there, that all pays for the next 15 wells and we build it out. So it was always a binary deal. It was either, we raised, I can't remember the numbers. We raised $7 million. We're going to spend $2 million, and it's either going to be a 0 or, a 10x over the next 7 years or something. And it was a 0.
Can't they tell if there's oil under the ground?
You'd think they should be able to.
The technology.
No, you know what? I think they can. I just think they haven't. Maybe at that time they didn't have the technology to unlock it.
Okay.
I bet the mineral was in the ground, but that was one. The other one was biotech. Like we have spent a fair amount of energy investing in venture capital biotech, which is a whole nother. I could go on for a half an hour about that, but I I think that's a credible place to invest, but it's much, much, much more difficult than people think it is, because of all kinds of regulatory dynamics. But there was an epoch of time where these biotech companies were actually going public in a preclinical stage trials. So you got lab rats studies. You haven't even been in the clinic in a phase 1 safety study, and you're already trading a public ticker. And we are very close to some of the what we think are the smartest venture capital biotech minds around, and we felt like we had an edge, and that we would be able to go make money doing that. And it was brutal. It just the world is not rational when you're dealing with microcap biotech publicly traded stocks that are actually essentially venture capital plays.
Right. No kidding.
So I wished I hadn't done that.
What's one of the best investments you've made? Like, do you have a moonshot story of like, I did Tesla early, I did Bitcoin early, and now, like, do you have any of those?
Oh, probably just the crypto story. I mean, we launched our first crypto fund. I know crypto's down now, but I think even today we're on our first crypto fund, which we launched in January of 2018, is up 6x, something like that. Yeah. So that was
that's going to be much more here soon.
That changed. Yeah, I agree, and that sort of was one balance sheet changer for me. And then another one, I did a really interesting land play. I did outside of Austin, Texas. We bought 30 acres of land, 20 miles east, and in a small town that's just blowing up, and it turned out to be a really, really good play. So,
and my last thought here is just AI. What do you how is AI going to impact investing and wealth building in terms of working with an advisor? Or some people are like, AI is going to be managing your money and doing all this stuff, and other people think you're going to have a human there to make critical decisions and understand what you're trying to do with your business, your money, your life. What are your thoughts on how AI is going to impact the industry?
Oh, I think it's a little bit of all of the above. I can remember back when the internet story became super interesting. Everybody was saying, "Oh, it's going to kill the financial services industry because there are going to be all kinds of robo advisors. Yeah, you'll be able to set this up and blah blah blah." We are creatures. We are social creatures. We need good advice, but the fact is, most of us actually crave the relationship aspect. Somebody we can trust, somebody who can be a truth teller, more than we actually crave the advice. As much as I don't want to say that as an advisor, I want to be the truth teller as well. But that relational aspect cannot be replaced by AI. But it can be assisted. It can be assisted by AI.
That's right. That's right. Well, Jeremy, I appreciate you joining me on the Founder Talk podcast. This is a great conversation, man. Where can people find you, connect with you, learn more about what you guys do?
Laureate-wealth.com, pure-crypto.com, and Boynton at laureate-wealth.com.
Love it. We'll link everything up. Thank you guys for watching. Appreciate you tuning in. Thank you for being on the show, and we'll see you on the next one.